Many states have laws limiting the interest rates that lenders can charge people. These laws were enacted with the intent of protecting consumers from rate gouging lenders. It seems like a good idea, but the fact is that states with low interest rate caps hinder people with bad credit and the credit rebuilding process. When I first started helping people with bad credit finance cars back in 1996, Michigan had strict usury laws. Auto loan interest rates were capped at 16.5, 19, and 22% depending on the year of the vehicle. Back then, only a handful of subprime lenders did business in Michigan. The ones that did would not approve people with really bad credit, and when someone had marginal credit, they would often pay the maximum rates listed above. Lenders did this to balance the risk of their lending portfolios. In other words, if there were no interest rate caps, one customer's credit may warrant a 25% interest rate, while another's might warrant a 17% rate. Since the lender is capped at 22% by the state, they ended up charging both customers 22%, which is the state cap. Additionally, since there were few lenders and the rates were capped, people with really bad credit often had to settle for a high mileage, unreliable, used car from an unreputable car lot with in-house auto financing. Each week, these consumers had to drive to the dealer to make their weekly payments. When Michigan changed the law to allow rates on all model years up to 25%, a few things happened. More lenders came to Michigan. More lenders meant more competition. More competition meant lower rates for many people with credit problems. Higher usury laws also allow people with really bad credit the opportunity to get a car loan with a reputable auto finance company that reported to all three credit reporting agencies instead of an unreputable used car lot that does not report to any of them. After the law changed, it was also easier to get people with bad credit approved on a brand new car. Before the law changed, new car rates were capped at 16.5%, and few subprime lenders would finance brand new cars. Getting an auto loan from a national finance company that reports to all three credit bureaus is extremely important if you are trying to improve your credit rating. If you settle for a loan from an unreputable dealer that does not report to the credit reporting agencies, not only will you be limited to an old, high-mileage car, you will not improve your credit rating by making all of your payments on time. Often, these car lots only report when you do not pay on time. Today, many states such as Nebraska and Rhode Island still have strict usury laws in place. In these states, it is much harder to get people with bad credit a loan from a national finance company. When people in these states are approved, they are often approved at the state rate cap, which, if I recall, is about 18%. Other states, for example Texas, regulate the rate based on the model year. People in Texas with bad credit can get a loan from a national finance company, but they're often limited to an older model year with higher mileage. It's my belief that states with higher usury rates benefit consumers through competition of lenders and the ability to get people with really bad credit approved for an auto loan through a national auto finance company.